The supermassive black hole means that this beautiful technical chart of global liquidity means we're about to start the next leg of liquidity, which we talked about before. The next leg of liquidity is the driver that will continue the next leg of this market. And when those factors come together, technological adoption, people investing in the space, liquidity starts flowing, you get the banana zone.
Despite recent price movements, the 2024 and 2025 crypto bull market is in full swing. At current prices, Bitcoin, the leading crypto asset by market cap, is up by around 143% year over year and just about $1,000 less than the previous cycle's $69,000 peak. However, we are still far off the current $73,500 all-time high, which has dealt a small blow to market sentiments. But one prominent investor remains confidently optimistic about the bull market and what's coming. Real Vision founder and chief executive officer Raoul Pal is looking forward to what he refers to as the banana zone, the phase of every crypto bull market where prices go completely crazy and parabolic. According to Pal, this much-awaited phase might be only weeks away. When it finally begins, Pal predicts crypto asset prices will run up so massively and suddenly that it will be almost impossible to keep up with everything happening. Pal is predicting that the overall crypto market cap will at least quadruple before the cycle ends in 2025, going from the current $2.2 trillion to $10 to $15 trillion after we hit the banana zone. In a recent thread shared on social media platform X, Raoul Pal offers unique insights into the banana zone, evolving global liquidity conditions, and the cryptocurrency market. According to Pal's tweets, the business cycle, comprising expansion, peak, contraction, and trough phases, is driven by the global liquidity cycle, which has shown clear patterns since the global debt reset in 2008. Pal observes that central banks reset their interest rates to zero following the Great Financial Crisis, initiating a new cycle of interest payments every 3 to 4 years. This created an ideal macro cycle that aligns seamlessly with the US election cycle, often prompting increased economic activity and the 4-year Bitcoin halving cycle. This all forms part of the everything code, Pal explained in one tweet, where the business cycle near perfectly repeats as liquidity rises to debase the currency to service the debt rollovers. Without it, yields lose all anchor in a debt spiral. The effect of that debasement is to lower the denominator, fiat currency, and that makes asset prices optically rise in value. The other part of the thesis is how assets including stocks, bonds, and most importantly cryptocurrencies perform in the face of this constant debasement. It's no news that crypto is the fastest horse in the race, a fact that Pal says will become even more pronounced when we enter the banana zone. The former Goldman Sachs executive delves fully into the everything code in a 2.5-hour masterclass recently posted on his Raoul Pal the Journeyman YouTube channel. As we bring you clips from the interview, please take a little time to share this video, give it a thumbs up, and subscribe to the channel for more videos like this. Thanks, and enjoy the video.
We're dealing with the technology adoption. It's the fastest pace of adoption of any technology that's investable. AI is not investable right now, and it's been growing at twice the speed of the internet. If we assume that it grows at the speed of the internet, which would be probably a false assumption, it should grow faster, for the rest of this year or so, we get to the end of 25 with 1.1 billion active wallets. Active wallets are not actual users because people have multiple wallets, much like people have multiple IP addresses, which is what this is showing too. We're comparing it to IP addresses. So we get to 1 billion wallets. That's a huge number. And that drives the adoption of the space based on Metcalfe's law and the valuation. Then if we extrapolate out into the future, I keep saying this space is going, this is the biggest macro opportunity we have ever been given. It's been the best macro performing asset of all time. It's the best risk-adjusted reward of any asset in all history. It's an alien asset class. That trend of $2.5 trillion today to 10 to 15 trillion this cycle to 100 trillion by about 2030, 2032 is driven by this adoption curve. That's when you get to 4 billion active wallets by the end of 2030. That's a mega trend. That's all you need to know. 2.5 trillion, 10 to 15 trillion, 100 trillion. You're trying to capture that. You're trying not to this up because this is the gift you've all been given, and everybody can put 10% of their wages in or whatever it may be because it's a democratized, fractionalized asset that's globally homogenous. Everybody in the world invests in the same product. Bitcoin is the same in Nigeria as it is in Brazil, as it is in the Cayman Islands. That is the gift to humanity. We get to invest in the infrastructure layer, the network layer of this incredible new technology. And on top, they'll build the applications layer, which will be the new Googles and Facebooks of this Web3 world. So that's what's driving this trend. The debasement of currency plus the ridiculous adoption of this technology, which is only growing. You hear every institution now saying, well, we want to build real world assets on Bitcoin rails. The exchanges are going to build on it. The corporations are going to build on it. You know, we're already seeing so many people building on top of these rails because it's just a better system. Then we've got digital ID layer. We've got the stable coins layer. We've got so many things being built. That's going to keep driving this logarithmic chart, which gets us to, you know, at the end of this cycle, we don't know, but, you know, Bitcoin, according to our work, could get to 400,000, could even go higher than that. Sure, it could be truncated too, but it doesn't matter because the trend goes longer. And your game is to stay in the trend. Even if you take some lifestyle chips off, let's say at the end of this year, just so you take economic pressure off yourself, it allows you to continue to participate in this trend. Because if you don't, you try and get cute and try and time it, you'll f this thing up. My job here is trying to unlock your future. So you can understand where I get these little mimetics from. How to unlock your future. You're being debased upon. Here is your answer. Don't f this up, is don't miss out on this trend. The crypto supermassive black hole, as I'm about to explain to you, means that really there's only one asset that matters. And then we'll come on to the final one, which is the banana zone that you all love. So again, we go back to the total liquidity chart. This is how you are being. This is what you need to unlock yourself from is the debasement of currency. Crypto's giving you that. It's also that tech adoption, and it's your route out. So at Xpan, we built out this table that I put on Twitter. I put it on every month. But look, it's a noisy table. But what it's showing, if you go to the bottom of this, the light blues are each year from 2011, crypto is the best performing asset 3 years out of 4. In the 4th year, it's the worst. So macro winter, it's a terrible asset. Well, terrible asset, the lows are always higher than the previous lows. It's in a secular trend. You don't even need to worry about it. If you just own it, you just own it.
The entire thesis is based on central banks' obsession with printing money to stabilize the economy and the markets. According to Pal, the entire system went up in flames during the Great Financial Crisis, and the only thing that saved the day was the central banks coming to the rescue. However, the underlying problems, population decline, declining productivity, and massive debts remain unaddressed. So, to avoid another complete explosion of the system, central banks have to maintain the facade of normalcy for as long as they can by periodically coming to the rescue to provide more liquidity for the markets. Every time they do that, asset prices rise, but cryptocurrencies like Bitcoin stand out clearly amidst all the noise, as exemplified by Bitcoin's 143 year-over-year increase. In comparison, the S&P 500 is only up by 26.17% in the past year. This is why Pal has given crypto the supermassive black hole tag. It's a massive opportunity to protect and rapidly maintain your wealth despite the constant debasement of fiat currencies. Let's get back to Pal's video.
But then when you put that together, even with the numerous 85% pullbacks, Bitcoin's done 20 million % returns. ETH, which started later in 2016, well, that's done 324,000% returns. And Solana has done 8,300% returns since 2021. When you look at the annualized performance, Bitcoin is 139% a year, ETH 146, Solana 203. Then we go down to the next best performing asset, technology. This is the NASDAQ, not the exponential age basket that we built in Pro Macro, GMI, and the exponentialist, different variations of it. This is just the NASDAQ. It's done 17% returns. So the NASDAQ has managed to outperform the Fed balance sheet, the global liquidity plus inflation by a few percent, actually by 5% a year. That's okay. Nothing else, no other asset has outperformed the debasement of currency plus inflation. Not one. The S&P roughly keeps you flat. Everything else, your future self is poorer from owning it. This This is profound in your understanding of asset allocation. Once you realize this, you realize you're wasting your time trading other stuff. You really are, because you are not going to compound the returns that you need for your future vision of yourself to be wealthier. So let's take NASDAQ, which is the best performing equity market in the world, bar none, over the last decade. And we look at it versus Bitcoin. It's down 99.92%. Get your heads around that. That's the difference between the next best asset beyond NASDAQ. It's alien. This is the biggest macro trend of all time. And it's so powerful that anytime you take money out of crypto and put it into anything else, you're going to lose money. So therefore, the only thing you can take crypto money out of is lifestyle, because lifestyle is priceless. Everything else is priced on a relative basis. And what you find is everything goes down. It's why a lot of people in crypto hold out to buy property until they're ready to, because property gets cheaper if your denominating currency is Bitcoin or another crypto. The supermassive black hole means that this beautiful technical chart of global liquidity means we're about to start the next leg of liquidity, which we talked about before. The next leg of liquidity is the driver that will continue the next leg of this market. And the central banks are showing that liquidity is coming, because them cutting rates says, hey, we're ready for liquidity to come. Remember, the reverse happens in crypto winter and macro winter. They start hiking rates and they start withdrawing liquidity. Here, they're increasing liquidity and cutting rates because they want stimulus. That is your friend, your biggest friend. And when those factors come together, technological adoption, people investing in the space, liquidity starts flowing, you get the banana zone. And the banana zone is just all of these factors coming together for macro summer and macro winter. That's what lies ahead as far as we can see.
The foundation is well established for the cryptocurrency industry to continue its expansion and evolution for decades, including substantial price appreciation. Every 4 years, we witness a dynamic transition from macroeconomic and crypto spring to summer and fall, characterized by soaring prices. These cycles are typically accompanied by significant increases in the global money supply, as central banks endeavor to stabilize their economies and avert potential crises. It is evident that the explosive growth in the money supply, coupled with the rapid development of various technological platforms, positions the cryptocurrency industry at the forefront of this transformation. What are your thoughts on Raoul Pal's outlook for cryptocurrencies, tech stocks, and the macroeconomic landscape in 2024 and beyond? Please share your comments and predictions for your favorite crypto assets in the section below. Additionally, don't forget to like this video, subscribe to the channel, and turn on post notifications for more content like this. Thank you for watching.